The African Continental Free Trade Area is expanding trade across the continent, but the financial system meant to support it are still struggling to keep pace. At the center of this challenge is PAPS, the cross-border payment system designed to reduce billions lost in transaction delays by keeping African trade settlements within the continent. But the real test is not its existence. It is whether enough trade volume is actually flowing through it to show up in regional banking revenues and strengthen internal liquidity. If fee-based income is not growing in the line with trade activity, it suggests a deeper issue. Many African financial systems are still not fully integrated, with cross-border transactions continuing to rely on external settlement routes instead of regional ones. This is where Afreximbank Q1 2026 result becomes important. As a key institution backing PAPS and trade finance infrastructure, its balance sheet reflects how much of the integration is actually happening in practice. The pressure on Afreximbank also highlights a wider reality. Development finance institutions are still carrying risks that commercial bank systems have not fully absorbed. Meanwhile, Africa already holds significant domestic capital across pension, banking, liquidity, and institutional funds. But much of it remains positioned in safer, short-term assets instead of productive trade and industrial systems. The gap between trade ambition and financial reality shows a system where policy is moving faster than the infrastructure needed to support it.